Today, we're breaking down Apple stock, the facts, the risks, and my personal IIGI score. Quick disclaimer before we start. This video is for educational purposes only, and this is not financial advice. Apple is one of the largest companies in the world. They design and sell consumer technology, iPhones, iPads, Macs, Apple Watch. But what really matters today is services. Services include the App Store, Apple Music, iCloud, Apple Pay, and subscriptions. This matters because services have higher margins and recurring revenue, which Wall Street loves. Let's talk numbers. Apple generates hundreds of billions in annual revenue and tens of billions in free cash flow. Apple also returns a massive amount of money to shareholders through buybacks and dividends. Their strengths are strong cash flow, a loyal customer base, and an extremely sticky ecosystem. Some concerns are revenue growth has slowed compared to earlier years. Apple is no longer a hyper-growth company. It's a mature one. Financial strength? 9 out of 10. Valuation versus growth? This is where things get interesting. Apple often trades at a premium valuation compared to its historical averages. Investors are paying more not because growth is exploding, but because Apple is viewed as safe, predictable, and dominant. The question becomes, are you paying for growth or stability? Reality check. Growth is moderate, margins are strong, and valuation assumes continued dominance. Valuation, 7 out of 10. Apple's moat is one of the strongest in business history. Once someone is in the Apple ecosystem, it's extremely hard for them to leave. Apple doesn't need to be first. They just need to be best at packaging technology. Competitive advantage, 10 out of 10. Apple's future growth depends on a few areas. Key drivers are services expansion, AI integration, emerging markets, and new hardware categories. Apple isn't flashy with AI, but when they move at scale. Risk. If innovation slows too much, growth could stagnate. Growth potential, 7 out of 10. No stock is risk-free. Not even Apple. The main risks are heavy dependence on iPhone revenue, regulatory pressure on App Store fees, slower consumer upgrade cycles, and competition from lower-cost devices. If iPhone demand weakens long-term, Apple's premium valuation becomes harder to justify. Risk level 6 out of 10. Final score. Financial strength, 9. Valuation, 7. Competitive advantage, 10. Growth potential, 7. Risk level, 6. Giving it a total score of 39 out of 50. In my personal opinion, Apple is not a get-rich-quick stock. It's a long-term, high-quality business that many investors use as a foundation. If you're looking for explosive upside, Apple may feel slow. If you value stability, cash flow, and dominance, Apple still makes sense to study. Whether it's a good investment depends on your goals, not the hype. If this breakdown helped you think more clearly about Apple, hit like and subscribe to Is It a Good Investment? We break down stocks, crypto, and markets, facts, risks, and opinion only.